Naturally, Nikunj, at a time like this, there is so much interest that shifts to asset classes such as gold, and Indian gold prices yesterday crossing that 50,000 per 10-gram mark. We have been hearing resounding commentary on gold from the likes of whether it be Jim Rogers himself or several other market gurus. So clearly, that seems to be a trend that is likely to pick up even further.
Gold is about asset allocation, Abba. Gold is something which you need to have in an environment where the yields are low. What really makes wealth over a longer period of time is asset allocation. Simple. If you had a great asset allocation model, and if your asset allocation model in the March and April got skewed away from equities, you have to invest in equities. Similarly, right now, if your asset allocation has gone higher because of the swell we've seen or because of the rally in some equity prices, then you need to book profits and move it to the asset where you are not invested in. I think depending on what your risk appetite is, you need to follow a simple risk model. Now, gold in a sense has been bought with the premise that the world is going to collapse and there are going to be, and liquidity may move back into gold. Now, that argument I've been hearing for years now. Now, you can look back and say that in India the gold prices have gone higher and they are at an all-time high, but globally they are not an all-time high. They are nowhere close to what they were in 2009 and 2010, largely because A, Indian Rupee has gone down, and B, there is an import duty factor which clearly is at play. So that explains why globally gold prices are not an all-time high, but in India psychologically they are above 50,000. Gold should be part of everyone's portfolio. You are in this low yield environment and money will search for yield. Right now money is moved into equities. It's a matter of time money will come back to other asset classes. And if that is the premise of the world, that we are in for low growth and low interest rates and a lot of liquidity for a long period of time, then depending on your allocation, you need to have allocation to gold. I mean, you, me, Aisha, everybody's watching the show. I would say that, look, I have exposure to gold because that's simple asset allocation and all of us should follow that.
Yeah, absolutely. And Nikunj, just to add to that, gold is not like it's suddenly propped up. For the last year and a half, we've seen that just about everyone's been saying that keep 5% allocation of your portfolio into gold. This is one commodity which is here to stay. And that's exactly what Jim Rogers as well said in his interview to Nikunj yesterday.